Good day, and welcome to today's Thermal Energy webcast as part of the Planet MicroCap Showcase. It is now my pleasure to turn the floor over to your host, William Crossland, President and CEO of Thermal Energy.
Thank you very much, and welcome everybody. Thank you for taking some time out of your day to hear the Thermal Energy International story. Thermal Energy International operates in the energy efficiency and carbon emission reduction business, and we are a proven, profitable, sustainable growth story with a compelling valuation. And I'm going to tell you all about that now. Standard forward-looking statements. So just quickly to sum up, we're in a fast-growing global market with very strong fundamentals. You know, the market for carbon emission reduction and energy efficiency has been strong and growing for the last several years. It really started to take off with the Paris Agreement several years ago. But more recently, as a result of the global pandemic, it's really strengthened even further. There's almost a universal Build Back Better approach being adopted by virtually every country, and most of our customers and most every multinational large companies have adopted new aggressive carbon emission reduction targets. We'll talk a little bit more about that. As I mentioned, we're an established company with a proven track record of growth and profitability. We've got an extensive multinational client base, list of multinational clients, and we've got a 5-year, over 30% compound annual growth rate on revenue and profitable. And despite the strong market and despite the proven performance and profitability, we are still trading at about a 1.5 times revenue. So, to talk a little bit about the market, I mentioned that the carbon emission reduction market and the energy efficiency market has been quite strong for the last several years, but it has really, I can't emphasize enough how much stronger the market has got in the last 12 months. That's coming from a lot of different areas. First of all, back in January, BlackRock, the world's largest asset manager, or imagine many of you might be familiar with, in their annual letter, they announced that they want to see their investee companies disclose more and do more on greenhouse gas emissions. And that very same day, there was a letter issued by 60 major multinational companies saying they would indeed do that. They were going to adopt more stringent ESG metrics. So there's increasing investor demand for ESG. In the U.S., you know, one of our largest single market, there's been sort of a total change in the focus on climate change. The new administration in the U.S. has said that climate change will be at the center of every policy, not just environmental policy, not just economic policy, but all foreign policy, all domestic policy, all security policies. Climate change will be at the center. Then you've got, you know, many of the countries in the world focusing on a Build Back Better approach with respect to the pandemic. We've seen that over and over again. And as I said, many companies and many countries have increased just recently, sort of doubled down on their carbon emission reduction targets. So back in December, the UK increased their carbon emission reduction target from 40% to 68% by 2030. Just a day or so ago, they announced they were going to get to 78% by 2035. Europe increased from 40% to 55% by 2030. A number of companies, PepsiCo as an example, back in January announced they were going to reduce their carbon emissions by 75% by 2030. So strong demand from all sectors. This next slide just sort of shows a little bit about the size of the market. So it's a great slide. If you're an energy nerd like me, it's pretty much all you need to see. It tells you everything you need to know about the sources, uses, and flows of energy in the U.S. economy, and most industrialized economies would be very similar. You can see all the energy sources in the different colors on the left-hand side. They then flow through the economy. The orange is electricity, and pretty much everything, every other color is some form of heat energy or thermal energy, and that's what we focus on, thermal energy efficiency. And out on the right-hand side, you see this big box called rejected energy. Rejected energy is the energy that's been lost somewhere in the system due to inefficiencies. So you can see that the U.S. economy only uses about a third of the energy. So they lose 2/3 of the energy they use, they lost somewhere due to inefficiency. And it was this huge opportunity represented by energy efficiency that resulted in the International Energy Agency declaring energy efficiency the world's first fuel. There's a couple things they wanted people to focus on by calling it the world's first fuel. First of all, they wanted people to realize that when you see that gray box, you realize that the opportunity represented by energy efficiency is greater than every other fuel source. And the second thing, if you need more energy, the first place they want you to look is energy efficiency. And the beauty of energy efficiency, it's a low-hanging fruit, because not only does it reduce carbon emissions, it's far cheaper than any other carbon emission reduction solution. So not only does it reduce emissions, it also saves you money. It doesn't cost money, it saves money and can have a much greater impact than renewable energy. The area that we focus on is industrial thermal energy efficiency. So that's the pink box there we've highlighted in blue. And the reason for that is, that's where you get large energy-intensive industrial sites. So if they're using a lot of energy, we can save them a lot of energy and do nice big projects for them. You can also see that 88% of industrial energy use is thermal. That's our focus. And that the industrial market is 2 times bigger than the residential and commercial market combined. So how do we do this? We design, engineer, and deliver industrial thermal energy efficiency solutions for our customers, working in partnership with our customers, using our own suite of proprietary products, which you see down the right-hand side. So Fluace, GEM, Steam Traps, Heat Sponge, Dryrex, Sidekick. We deliver projects with about a 2 to 4 year payback for our customers, so we're adding real value. They will last as long as the plant is in operation, essentially. They're built to last, so easily last 30 plus years. So when you've got a project that has a 30-year life and a payback in 2 to 4 years, you can see it's a very compelling ROI for our customers. 70% of our business is a turnkey solution where we deliver the project and install it complete for the customer. Those projects tend to be about $500,000 to $2 million. But we also do what we call major equipment or customized equipment packages, again, based on our technology. If the customer wants to install it themselves, that's about 30% of our revenue, and those orders are $500,000. And the other important thing is we rarely compete. We're not a bid-to-spec company. We are working in partnership with our customers, so it is very rare that we're actually competing with someone else for price. How do we do this? So we've got a global footprint. Our key markets strategically that we're focusing on, North America and Europe. So you can see we've got corporate offices in Canada, United States, and the UK. And we've got sales offices in 7 countries and growing. But the focus is North America and Europe. But we have completed hundreds of projects all over the world and actually in 30 different countries. We really focus on our key customers. So if our key customers have a project they want to do for us outside of our key markets, we're more than happy to do it for them. This is just to give you a snapshot of the typical customer and the typical sector, the typical projects. As I mentioned, we focus on very large multinational customers because A, they have the large energy-intensive sites where we can do nice big projects, but they also have hundreds of sites worldwide. And so, once we've convinced them at one site, it's much easier to do, site after site after site. The bar across the bottom gives an example of our recent orders. And there's a couple of things I'd like to highlight there. You can see the variety of sectors. We do projects and have done projects in almost every sector you could possibly imagine. But 80% of our business tends to be in non-cyclical sectors such as food and beverage, hospitals, and pharmaceutical. So when you go across from left to right, you can see the first company was, a food canning company. The next was a hospital, then a tissue company, then a dairy, a brewer, snack food, tires, pet food, chemical, and food ingredients. So a real variety of sector and a variety of customer. You can see the projects average from about $500,000 to $2.5 million. You can see the payback ranges, sort of 2 to 4 years, and you can see the location is diversified by Europe and North America. So we have been executing. I mentioned we're a proven, profitable, sustainable growth story because we have been executing our strategic growth plan for the last several years, and it really has 3 main pillars. The first is leveraging our existing high-quality customer base. I do often say to our sales team, we don't need any new customers. We just need to sell more to the customers we have, which is true, but of course I always am happy to get new customers as well. But in 2020, about 80% of our revenue was from repeat orders from existing customers. The second thing we want to do is gradually increase our product portfolio, again, so that once we've sold a customer one product or one project, we can then cross-sell another one. Our portfolio now, as I mentioned, consists of Fluace, GEM, Heat Sponge, Sidekick. And the final thing we want to do is grow our team and global presence. So over the last couple of years, we've added 2 people in Germany, somebody in Poland, 1 in the U.S. Gulf Coast to focus on the oil and gas, and 1 in Latin America. And we want to do all of this both organically and through acquisitions. And we have done it both organically and through accretive acquisitions because in 2018, we acquired the boiler room equipment business, which gave us Heat Sponge and Sidekick, so that was an increased product range. It also added a new distribution channel for us. So what has been the outcome from this strategy? You can see here, this is the 5 years of revenue, EBITDA, and net income leading up to the LTM February 29, 2020. And of course, that's about a year old. But there's obviously a reason why I focused on that. I wanted first to show you what our results had been prior to the pandemic. And so you can see that's about a 31% compound annual growth rate on revenue. Just before the pandemic was declared in March, we were generating about $3 million in EBITDA and about $1.7 million in net income. So some phenomenal, great results. So obviously the strategic plan is working. But then, of course, the global pandemic hit, with travel restrictions, site lockdown, social distancing, all kinds of mitigation measures, and that did impact and continues to temporarily impact our ability to visit customer sites and execute projects. You can imagine if we're doing a turnkey solution, there's a lot of site visits required. So that became very difficult, particularly in the fourth quarter of last year, sort of March, April, and May, and the first quarter of this fiscal year, June, July, and August. And these COVID-19 mitigation measures, they do impact our turnkey heat recovery projects more than our major equipment when we're just selling a piece of equipment. So that has impacted it. As you can see, back in March and April of last year, it really caught the world by surprise. I don't think anybody knew what to expect. So there was, especially then, there was really widespread travel restrictions and site lockdowns. Customers weren't allowing anybody on site. And as a result, our revenue dropped by about 53% in the quarter. Interestingly, though, we were still able to finish the year, fiscal 2020, with those fourth quarter results being impacted by COVID. We were still able to finish the year with revenue growth, almost $2 million in EBITDA, and about $1.2 million in net income if you exclude, about a $3.1 million non-cash write-down of intangible assets that we took at the time because of the uncertainty of COVID. And the other interesting thing is, although, our heat recovery projects, our turnkey heat recovery solutions have been negatively impacted, revenue for our GEM product and heat sponge product, which don't require the same level of on-site service, they are actually up this year to between 10 and 20%. So that's great. And you can see, despite COVID, on a year-to-date basis, for the first 9 months of fiscal 2021, we were still generating EBITDA of about $1 million and net income of $329,000. So some great results given the challenges that all of us are dealing with right now. But the picture is even actually a little bit better than that. I wanted to highlight here, what we did here is we took the average quarterly revenue pre-COVID, which was $6.2 million. Then we said in the early COVID period is when everybody was not sure how to handle it. There was a lot of uncertainty. There was a lot of restrictions. That's when revenue dropped more than 50% in Q4 and Q1. But then for Q2 and Q3, it's already starting to build back to our pre-pandemic levels, so $4.4 million in revenue. Profitability even better. You can see in the last 2 quarters, we've averaged $500,000 in EBITDA and averaged $300,000 in income, almost $300,000 in income. So some very great results more recently. We're already building back to the levels we were in pre-COVID. It gets even better because on the order intake side, it's very encouraging. As I mentioned, our customers, there's unprecedented increased demand for our product and services now, given everyone's desire to increase their carbon emission reductions. So our year-to-date order intake is actually up 87% compared to last year. Our order backlog is 79% higher than it was at this time last year. And despite COVID and despite what we've been through, we have maintained positive cash flow. So we continue to have a very strong cash position of $4.4 million and strong working capital of $4.2 million. So to sum up, at the recent price, I actually haven't checked what it is today. We've got lots of meetings lined up, but a couple of days ago it closed at 24 cents. That equates to a market cap of about $39 million, enterprise value of 38, because although we have a bit of debt, we have net positive cash. And so that equates, assuming the pre-COVID levels of performance, the normalized levels of performance, that's about 1.5 times revenue, 13 times EBITDA, 23 times earnings. So certainly, in my view, Thermal Energy's current valuation does not reflect, A, the proven growth and profitability that the company has delivered over the last several years, nor does it reflect the current market improvements, the significant increase in demand for carbon emission reduction and energy efficiency products. So just to summarize again, compelling investment opportunity. We've talked about it. Fast-growing global market with strong fundamentals as a result of Build Back Better and new carbon emission reduction targets. Established company with extensive multinational client base and strong growth track records. Compelling valuation at 1.5 times. So as I started the presentation, Thermal Energy International is a proven, profitable, sustainable growth story with a compelling valuation.